Welcome back. Let's take a look at futures this morning with a firmer tone. Dow Industrials right now up 77, the Nasdaq up 37, and the S&P 500 higher by 10 points this morning. The Federal Reserve released its July minutes yesterday, also saying that inflationary risks could be a cause for further tightening, while a majority of members said that they see upside to the economic pressure currently underway. This pushed the 10-year Treasury yield to the highest level in 15 years, talking about yields not seen since 2008. 4.296% is the yield right now on the 10-year. Up 4.25 basis points. Joining us right now is Andersen Capital Management Chief Investment Officer Peter Andersen. Peter, great to see you. Thanks very much for being here this morning. What's your reaction to where yields are right now?
Well, as you said, they're quite high, historically high, and I do think they reflect the results of those minutes, Maria. You know, if I just had 5 minutes with that board, I guess the one thing I would say to them is, everybody, just take a little speed off this ball. We've had 11 hikes. Only 4 of them are a year old. So we need to let those hikes work themselves through the system. But I don't know if anybody ever says that. I've been reviewing the minutes of all these meetings, and it would be fantastic if at least one board member had some kind of opposition and threw that thought into their heads. I'm actually speechless that nobody has brought that up yet.
Yeah, but I'm just wondering what the impact of all of this is going to have. I mean, you're talking about steeper costs for individuals and businesses here, for borrowers, raising concern that this is going to squeeze the economy even further, tip us into recession.
I think that's quite a possibility, not necessarily a recession. I've never been a fan of predicting recessions, but I do think if they keep pushing this way and if they don't stop at the next meeting in September, there will be much more concern about this going forward. I think they've hiked enough. I think we need to see how the past hikes work themselves through the system, and we need time with this. And every time we get a piece of economic data, we don't have to react immediately to that data and say that we need to do some kind of policy hike. I mean, where is the intelligence behind this? It takes months when you have some economic data and a hike to work itself through the system.
Well, we've had some pretty good data. Mark Tepper, jump in here, and the data has lifted yields. We'll see how this impacts things. In the past, when you have a yield at these levels, that's disruptive for the stock market.
Yeah. And you know what? I mean, a lot of the economic data has been surprising to the upside, which is why I think all of a sudden, you know, there's some whispers that maybe the Fed has, you know, a few more hikes to go potentially. But Peter, you know, when we kind of look at projections for 2024, as far as the stock market goes, as far as the economy goes, I'm really seeing two conflicting positions on what next year is going to look like. On one side, you've got Wall Street analysts, which believe that we're going to see 11% earnings growth in 2024, which would imply that we avoid a recession. However, you look at the Fed fund futures, and they're pricing in over 4 rate cuts in 2024, which would imply a recession. Yeah. So somebody's wrong here, Peter. Who do you think is right?
Well, I certainly think actually neither is right, frankly. I don't think there's going to be any cuts. I don't know why people are immediately jumping to the conclusion that if we don't do anything, we have to then reverse our steps and start cutting rates. And I do think the economy is still strong. The consumer has stayed very, very robust through all this. So cheers to them. And I do think that will continue. And I think the stock market is really, look, there's a lot of conflicting opinions out there. I'm not surprised at all, given where we are and how we've gotten here. But there's more conflicting opinions than ever. And so I think now it's a stock picker's market, and it will be even more so next year.
Yeah, and
so
we're getting
to ignore.
Yeah, we're getting a good sense of where things stand in the earnings period. It's, of course, a big week for retail earnings. Walmart is reporting second quarter earnings in the next hour. The retailer is seeing big gains in subscribers for the Walmart Plus service. It could potentially pose a threat to Amazon Prime. Peter, what are you expecting from Walmart, or how do you see the consumer right now?
I think the consumer is flocking to places like Walmart because, like all of us, they're concerned about inflation and higher costs. And inflation really, even though it is moving in the tamed area, we still are concerned about that. So Walmart's numbers should be very strong. And I also think that even though they might be a competitor against Amazon. Remember, Maria, Amazon has been at this business for 15, 20 years. Walmart is a relatively new entry into this competitive marketplace. I think their results will be strong, but I'm not worried that it will impact Amazon's threat at all.
All right. New entry in terms of online.
Yes, exactly.
Yeah. Okay.
And, it represents consumers are very smart when it comes to price searching. Yeah. So they will go to the lowest price, and Walmart is the king or queen of that.
For sure. Peter, good to see you. Thanks so much. Peter Andersen this morning. Thank you, sir.